A very good morning to everyone. This side CA Aishwarya Jaju, and I warmly welcome CA Arpit Haldia sir, the speaker for the day, and CA Rajesh Agarwal sir, the Vice Chairman of Pune ICI. I also welcome all our enthusiastic participants. It's really wonderful to see all of you on an early morning of a weekend. GST has been a tough nut to crack since its inception. And so we at Pune branch of WIRC, jointly with Pune Vikasa, are trying to ease this task for the professionals by arranging various seminars on different topics. In one of the articles of Business Standards, the headlines ran saying, a blow of show cause notices, statutory appeals, and review petitions is likely to grow the volume of litigation substantially over the next 2-3 years. Considering the same, we are here with 3-day refresher course on GST litigations, where we are having eminent speakers to enlighten us with their views on the same. I request CA Rajesh Agarwal sir to welcome our speaker.
Good morning, sir. Thanks, Aishwarya.
Good morning, Rajesh.
I welcome Arpit Haldia sir and all my participants for the day. Sir, I after completing yesterday's session, there was a major queries with respect to the input tax credit rather than on the investigations and summons. Because definitely the topics are crashing. In GST audit, departmental audits under section 65, there are more focus on the input tax credit from the department side. So today we definitely clear our most of the issues from the Arpit sir. I already heard sir in other seminar, and most of my confusions was clear whether to go for litigation and whether to go for payment. And today also my all participant will definitely clear their concepts and queries. Thanks for accepting, sir, our invitation.
My pleasure, Rajesh.
Thank you. Thanks. Over to you, Aishwarya.
I welcome CA Arpit Haldia sir, who has a rich experience of 15 long years in practice. You name a degree in commerce and you'll find it attached to the name of sir. He has completed his PhD, DIRM, CWA, LLB, CS, as well as DISA. He has completed CA within rank at inter-level. He has authored books on GST like GST Made Easy, GST Search and Seizure, GST Mini Ready Reckoner. Articles written by him have been published by Taxman Publications. Sir is also an editor to GST Tariff of India by R.K. Jain. He is currently a partner at Mrs. Paritosh Gupta and Company. He has also been active part of Central Wing of ICI. We are all glad to hear to you, sir. We at Pune ICI warmly welcome you. Over to you, sir.
Thank you. A very warm welcome to all the participants. Rajesh Agarwal ji, Vice Chairman of Pune branch of ICI. Aishwarya ji, the MOC for today, and all the members. It's really a pleasure to be amongst you on the topic of input tax credit. And at the start, what I would say that our profession is facing a very big problem what we are seeing at Gurgaon branch, and it is our responsibility somewhere to stay united, because our central leadership has also taken a firm stand, and it is the time to stand together and be with our brothers, because it might be today it might be them today, but somewhere down the line it might be any of us. And what the department is doing is trying to search the easiest fall guy in the entire proceedings. There was one seminar which I had taken at Aurangabad branch in December 2019, which was romancing the risk associated with the profession, that where the professionals had to take care while performing their duties. And the incident which has happened about 2 days back, further emphasizes the fact that we have to be very careful in the present times, and as a professional, it's a duty to have all the documents and at the same time stay firm with our friends in case they are facing anything like this. So, and it's a very heartening thing to see that the central leadership of ICI has come together and are standing firm. And there was a clarification and the press release issued by ICI late in the night also, and all the central council members were there at the site also. So at the outset, let's stay united, let's stand firm, and whatever way we can help our professional brothers, let's help them. Second issue which I would like to highlight is that recently Honorable Apex Court gave a decision in case of Mohit Minerals case. It was relating to ocean freight. But when I went through that decision and the initial submissions by the government and then the petitioner, the respondent, it was feeling like that the case is firmly decided in the favor of the petitioner, that is Mohit Minerals. So what would have been written in the judgment of 120 pages other than the submissions made by the government of the respondent, that is Mohit Minerals. But when we go through that judgment, it really shows that how the art of pleading, how is the art of interpretation most relevant in case of litigation. And the ASD Additional Solicitor General appearing on behalf of the government, really the way he articulated the issues, it was as if then whenever that as in the slowly as I was reading through the judgment, it started to felt that the judgment would be going into the favor of the government. It was only in the last part that the things turned and the issue was decided in the favor of the taxpayer. But really, as a professional, and when we are into the litigation series, I believe that as a chartered accountant, we should go through these judgments because they make us learn how to interpret the law. And really, if anyone, if any of the participants who have gone through that judgment, they would feel that the way the things have been put in by the government, it was as if they have won the lost case. It was only the classification of the composite or the mixed supply that helped the taxpayer to win the judgment. Otherwise, the arguments by the government and Venkatraman, the additional Solicitor General of the India, it was wonderful. And as a professional, I would recommend each and every participant who is present here to go through the judgment in the weekend. And believe me, the way to interpret the things would be completely changed through that judgment. And somewhere down the line, we as a chartered accountant limit ourselves to compliance part only. We only understand and go through the law. We do not go beyond how to interpret the law, what is the relevance of the constitution. And I believe that yesterday's session with Avinash Poddarji would have been a great session because he is one of the luminaries of our profession, and the way he discusses the things, and it only further emphasizes that we as a profession should not limit ourselves to reading the law to make the compliance of the law, because as a chartered accountant we are well blessed with the art of interpretation. It is only that we are limiting ourselves to the compliance part only. And as Aishwarya ji, the MOC for today, said that the headlines of business standards stated that there are whole lot of show cause notices coming on. Accept those show cause notices because those are the professional opportunities for you. Because unless until there is a litigation, how we as a professional would come and argue? See, I am a firm believer that we should not earn through the vagaries or the difficulties which the taxpayers are facing through the implementation of the portal. This is something that the basic infrastructure which the government should give. And if the taxpayers are facing through problems in the infrastructure part, we as a professional should raise those issues. But at the same time, when the issue comes for interpretation of the law, yes, we are there. Let's try to fight it out. Let's try to interpret the provisions. And before going on to the merits, try to highlight the issues which are there in the law. Let's take a small example. Almost all of the 92 participants which have joined till now, who are practicing into GST, would have received at some point of time a notice regarding a mismatch between a GST 3B and a 2A. Almost every one of us would have received. And if all the participants who are here, if they have access to such notices, just see that what is the section which the revenue officer has written for the impunged issue of show cause notice. Yes, it would be issued under section 73/74. But this is a section for demand and recovery, which says that if the input tax credit has been wrongly availed or wrongly utilized, then it would be recovered from the taxpayer. But it has to be wrongly availed or wrongly utilized in some of the section. In some of the provision of the statute which say that ITC availed in contravention to this provision would be wrongly availed. Let's take an example of ITC availed beyond the statutory time limit of filing of due date of return for the next year of next financial year of September. It is if I claim say credit of 2020-21 beyond say 20th October 2021, it is a violation of section 16 subsection 4. So if I am claiming credit of 2020-21 beyond 20th October, I am violating section 16 subsection 4. So whenever I am receiving a notice that you have claimed credit beyond 20th October 2020-21, it would be section 16 subsection 4 read with section 73/74. It would not be merely section 73/74. So some section has to be contravened for initiation of proceedings under section 73/74. So now the question comes, which section I have contravened if there is a mismatch between a 3B and a 2A? And believe me, 95% of the notices are coming without mentioning any such section, because they themselves do not know that what is the section which says that there has to be a matching between a ITC claimed in 3B as well vis-a-vis the ITC reflected in 2A. And what we do whenever we receive the notice, we start to reply to the notice on the basis of merits, that my purchase is genuine, I have paid the consideration, my goods have been received, I have the e-way bill. No, this is the last part of the submission which should be there. The law has to be interpreted first. The lacunas in the law have to be highlighted, and then the merit, the reply and the merit should come. If I file a tran 1 after expiration of the due date, even by 1 day, if I filed tran 1 on 28th December 2017, I was not allowed to file. I had to approach the jurisdictional high court. So the revenue plays on my non-compliance even by 1 day without going into the merits. Even if I say that I have a genuine transitional credit, what they say that no, you have not complied with the procedural part, so we will not allow you to file the tran 1 even if your credit is genuine. So why as a taxpayer, when there are hundreds of lacunas in the law, I do not highlight them? I straight away start on merits. When the revenue goes on to the merit part at the last point of time, so as a taxpayer, I am also entitled to go on to the merit part at the last point of time. First, I have to highlight the issues which are there in the law. Let the revenue officer respond on them. And this is what the litigation series should be all about. Try to discuss the provisions of the law. Try to analyze the law provisions. And going after this litigation series, it is not as if the three speakers who are there in this litigation series are going to explain each and everything about litigation. But somewhere down the line, we three professionals somewhere would ignite zeal into you that yes, now I have to read and interpret the law, not only with the perspective of the CGST Act, but also with the perspective of the Allied Acts and the Constitution. And it is somewhere, what I would say, that we are not utilizing our studies which we have done in our chartered accountancy course when we are not interpreting and learning the law. So whenever we receive a notice of 3B and 2A, first highlight the issue that you have not written what is the provision which I have not complied with. Because there are 174 provisions in the CGST Act. And if a notice is coming of 73, 74, without specifying the relevant part of the statute which I have not complied with, then whether I am required to reply on each and every part of those 174 sections. There is a decision on penalty under section 122. That supposedly I have been issued a notice, and believe me, whatever penalty notices which are coming, 90% of notices are saying that you are why not a penalty under section 122 be imposed upon you. They are not referring to the relevant part of that section. They are only providing section 122 penalty, why not it should be imposed on you. The first submission, going beyond that, I have complied with the provision, there was no mens rea, there was a genuine intent. Don't try to say that. The first submission should be, sir, let me tell that what is the offense I have committed, because under section 122 subsection 1 there are 21 offenses. In section 122 1A there are 4 offenses. In section 122 2 there are 4 offenses, and in section 122 3 there are 5 offenses. So approximately there are 35 offenses under section 122. Whether I have committed all those 35 offenses? If yes, then the penalty should be levied for each of those 35 offenses. It is not the case. As a taxpayer, I am entitled to know that what is the specific offense which I have committed. And if the notice is not specifying on that part, the notice itself is invalid. And why the officers are not specifying any specific section? Because they themselves do not know that what is the offense which they want to highlight. Because if they write a incorrect offense, the entire proceedings would be liable to be dropped. So when I am replying to a notice which is not specifying the offense, I am giving the officer an opportunity that while passing an order, he would pass the order on merit. So whenever we are receiving a notice, be it input tax credit, be it on any other section, try to figure out whether the notice itself is a valid notice or not. Because Honorable Apex Court in Vrindavan Beverage has said that notice is a foundation. And in today's session, I would only be focusing on the legal interpretation part of these provisions. And yesterday only, there was a notice which was issued to one of our client in June 2021 for a mismatch between a 3B and a 2A. I replied to that notice. And my last submission and 10th point was on the merits. Rest on from the first to the 9th point, it was only on the interpretation and the issues with which are there with the notice or with the provisions. And the officer said to me that why do you give a reply of 32 pages which are not covering the merit part? Give us a reply on the merit part. I said that as a professional, I am duty bound to reply on the issues first and then on the merit. The proceedings were dropped. Because the officers themselves do not know that how to reply or how to pass an order. Once a reply is received covering all the interpretation part, the lacunas in the law. So let's try to start with today's session and interpret the ITC part. I am not putting on the slideshow because there are some issues with the slide show. Whether the screen is visible, Aishwarya ji?
Yes, sir. It is visible.
Okay. Okay. So the first part, see, every statute has its origin from the constitution. And if you will go through the Mohit Mindra's judgment, it extensively discusses the constitutional aspect and then goes on to the legislative part. And same with input tax credit, that we very commonly say that input tax credit is my vested right. Has any one of us thought that why we say that input tax credit is my vested right? What is the term? What is the meaning of the term vested right? Vested right means in common parlance that a property which I hold to the exclusion of others. And when I hold that property to the exclusion of others, when I satisfy the conditions which have been laid down in the law. So from where this contention is coming that I cannot be denied of my ITC because it is my vested right. It has to be somewhere. It is not in the GST law that ITC is your vested right. It is coming from Article 300 capital A of the Constitution of India. What it says? It says that no person shall be deprived of his property save by the authority of the law. So what Article 300 capital A says that no person shall be deprived of his property save by the authority of the law. So the first thing for application of Article 300 capital A is that I should have that property. When I seek to invoke Article 300 capital A. And what is property? That is my vested right. But when I become the holder of the property, when I satisfy the conditions as laid down in the law, because Honorable Apex Court in numerous judgments has said that ITC becomes a vested right only when the conditions as laid down in the law are fulfilled. Unless those conditions are fulfilled, it is only a benefit granted by the law. Once those conditions are fulfilled, then it becomes my property. And once it becomes my property, I cannot be deprived of my property without the authority of the law. To become so that ITC becomes my property. What are the conditions laid down in the law so that ITC becomes my property? It is in section 16 subsection 2 because it says about entitlement to the credit. So first I should be entitled to the credit and then I should think of taking it. So all the conditions as have been laid down under section 16 subsection 2 to the extent I can fulfill them. The term to the extent I can fulfill them, that we would be discussing later on in the session. But for now, the conditions as laid down under section 16 subsection 2 should be fulfilled so that ITC becomes my property. So the first thing we should be with which we should be clear in our minds that merely by registering into GST, ITC does not become my vested right. It becomes my vested right when I satisfy the conditions as laid down under section 16 subsection 2 to the extent it is possible. And once I satisfy those conditions, ITC becomes my vested right, ITC becomes my property. And once it becomes my property, it is incorrect that I cannot be deprived of my property in any scenario. Yes, I can be deprived of my property, but only by the authority of the law. And what is the authority of the law? It is a valid law passed by the legislature. See, whenever a government acquires a property compulsorily, say a property is situated on the highway, the government acquires those property for extending the highway. This is called the compulsory acquisition. And since the law for compulsory acquiring the property is the valid law, therefore a person whose property is acquired under the compulsory acquisition law is not hit by article 300 capital A, because his property is being acquired under the authority of the law. And what is the law? A valid law passed by the legislature. So now the question comes, what is a valid law? A valid law is a law passed by the legislature. It is not a law which is there in the rules. It is not a law which is given through the circular. It is not a law which is given through a press release. It is not a law which is given on the Twitter handle. This is one of the most significant aspects to understand. That once I have satisfied the conditions of 16 subsection 2, to the extent it is possible for me to comply with, then I can only be deprived through a valid law. I cannot be deprived of my vested right through a circular, through a press release, through a Twitter handle, through a rule. Once we are able to understand and put it practically into the GST law, believe me, 95% of the issues would be resolved. And we would be taking cue of this explanation that I cannot be deprived of my property without the authority of the law. I cannot be deprived of my ITC by the rules, by the circular, by a press release, or by a Twitter handle, when we would be discussing Rule 36 sub Rule 4, when we would be discussing GSTR 2B. But the fundamental discussion would be going around Article 300 capital A. So before moving on to the discussion part, first thing which we should be clear about is Article 300 capital A, and the fact that ITC becomes a vested right only on the compliance of the conditions as laid down in the law. And once it becomes a vested right, then it cannot be deprived by a circular or a rule or a press release. So this is the first principle which we would be commonly relying upon. Then comes the second principle, that a law cannot compel a person to do the impossible. And that's why I keep on emphasizing in each of my lectures that we have to be versed with the legal principles, because they are something which would help with the interpretation of those principles have been developed over the time. And when we are able to use those principles in our submissions become that much more effective, and the person sitting on the other side, if he is ready to understand, he would understand. But even if he is not ready to understand, someone sitting above him would understand. So this principle says that I cannot be asked to do the impossible. Let's take a very simple example. Supposedly a started accountant student has an examination of CA final on say 22nd of May 2022 from 7 a.m. to 10 a.m. And on 21st of May 2022, a curfew is imposed in the city, whereby the entire movement of the students is restricted and they cannot appear in the examination. So they are not able to appear in the examination on 22nd May 2022, and the institute releases the result wherein they are declared as failed. What the student will say? That, sir, how can you give my result as failed when I could not have gone outside my house? Whether I should have done the impossible, that by going outside the house, the police would have arrested me and put me into the jail just because I had to appear in the examination. So you are assessing me, you are judging me for something which I could not have done, because it was not within my purview, it is not within my powers. It was not within my ability to go and appear for the examination. So similarly, Since a chartered accountant student cannot be asked to appear in the examination, since there was a curfew outside, he cannot be asked to do the impossible. This is the same principle which we are applying in our day-to-day life, which is applicable in the law also, which is said, let's not forget impossibilia. There was one case before Honorable Bombay High Court, wherein a person has sold his property and he sought to invest the consideration in the bonds issued under Section 54 EC. The statutory time limit for investing in those bonds was 6 months from the date of the sale of the property. There were only two companies which could have issued the bonds. One is REC, Rural Electrification Corporation, and second is NHI. None of those companies issued their bonds in that period of 6 months. So the taxpayer went before the Honorable Bombay High Court and said that since there were none of the companies who had issued the bond, how could I have invested in those bonds, because there were no bonds at the time during the entire period of 6 months. So how could I be asked to do the impossible? And why should I be denied of a legible exemption which I could have availed, and I could not do so due to an impossible condition? And Honorable Bombay High Court extended the time limit for compliance under Section 54 EC. So the same thing goes with GST also. And we would use this maxim at multiple places. In Rule 36(4), in Section 16(2)(c), in the presently substituted Section 38 White Finance Act 2022. So these are the two conditions which we had to principles which we have to keep update with ourselves and use it at the points wherein we can use them. Now coming to the notices which are being received for GSTR 3B and GSTR 2A. I would divide the time zones into three different time zones. The first is the period wherein the ITC has been availed up to 9th October 2019. The second is the time zone wherein the ITC was availed after 9th October 2019, but before the advent or before the incarnation of GSTR 2B. And the third is the time zone when ITC has been availed after GSTR 2B. So there are three different time zones. Why these time zones? Because in all these three circumstances, my submission would differ. Although there would be a submission on merit in all these three conditions, but this would be the last available submission. Before that, I would only reply on the validity part of these provisions. So why these three times? Before what happened on 9th October 2019, Rule 36(4) was inserted. A new condition for availment of input tax credit was inserted. And what happened when GSTR 2B was introduced? A new condition or restriction was imposed for the purpose of claim of credit. But before discussing these three situations, the first thing which I would like to clear, when Rule 36(4) is applicable. See, Rule 36(4) says that any ITC which has to be availed on the basis of counter submission of statement of outer supplies by the supplier. So what is the term used? Availed. And when is the ITC availed? It is when the 3B is filed. And there is an incorrect notion that this Rule 36(4) is applicable only for the returns which are filed for the period October 2019 or any period thereafter. It is not so. The provision is applicable on each and every ITC which has been availed by filing of the returns for any of the period after 9th October 2019. So if I'm filing a return of March 2018 after 9th October 2019, Rule 36(4) is validly applicable because ITC has been availed after 9th October 2019. So the first thing which we should be clear about is that any ITC, any return which has been filed after 9th October 2019, the revenue can validly invoke Rule 36(4). So now coming to the first time zone, that is 1st July 17 to 9th October 2019, any ITC which has been availed, any return which has been filed up to 9th October 2019 is covered in this first time zone. So what you do when you receive a notice for ITC availed up to 9th October 2019, say for the period of 17-18 or 18-19, because in these 2 years, most of the returns would have been filed up to 9th October 2019. So my submission, as I had discussed in the first, at the outset, that whenever a notice is received for a mismatch of credit for say 2017-18 or 18-19, the notice would be issued in section 73-74. But the question is, what is the section? Which section I have not complied with? So for the reference, these are the sections and the rules relevant to the claim of matching of input tax credit. Section 16, which is a basic condition for eligibility or taking credit. Section 38, which requires filing of GSTR 2. Section 39, which requires filing of GSTR 3. Section 41, which said about the provisional credit, and section 42, which talked about matching, reversal, and reclaim of ITC. And the relevant rules are Rule 60, Rule 69 to Rule 72. So these are the relevant sections. That section 16, section 38, 39, 41, 42, and the Rule 62, Rule 69, and Rule 69 to 72. So for me, there are 3 enabling sections wherein the revenue can claim that there is a mismatch of credit vis-a-vis the relevant provision of the statute. The first section which the revenue can invoke is section 42, that you have not complied with the provisions of section 42, and since there is a mismatch between a 3B and 2A, therefore the notice is being issued under section 42. Read with section 73-74. So in my opinion, out of the 100 notices which you had received, 90 would not have been 90 would not have any provision referred, and rest of the 10 would have referred section 42. So now the question comes that whether at all provisions of section 42 are applicable. Let's try to read section 42 and the allied provisions to see that whether at all section 42 can be made applicable. Section 42 requires first basic thing, that the details of every inward supplies furnished by a registered person should be matched. So what was envisaged in the section 42? That a person, the supplier, would file his GSTR 1. I would accept those entries. I would accept those entries and my GSTR 2 would be filed. So the details of inward supplies which are being furnished by me would be matched by the details of outward supplies filed by the supplier. And which section provided for filing of GSTR 2? It was provided under section 38 of the CGSTR. So for application of section 42, a statement of inward supplies was required to be filed under section 38, and the basic fundamental for section 42 matching was filing of return under section 38. And once return under section 38 would be filed, then only matching would take place. So what was the due date for filing of return under section 38? For this, we have to see all the notifications which have been issued till date for notifying due date of filing of GSTR1. There is a para number 2 for the statement to be filed under section 38. And that para number 2 says that the time limit for furnishing the details or return as the case may be under section 38 or section 39 of the said act for the months of say July to March 2019 shall be subsequently notified in the official gazette. And this para number 2 is there till date in every of the notifications which are being issued for notifying the due date of filing statement under section 37, that is GSTR1. So when I read through these three things, that is section 42, section 38, and the notification notification of GSTR notification providing due date of GSTR1, the para number 2 of that notification. One thing I can say that till date, the due date for filing of GSTR2 under section 38 has not been notified. So what is the big thing? If due date of filing of GSTR2 under section 38 has till date has not been notified. The big thing is under the proviso to rule 69. Rule 69 says, the proviso to rule 69 says that provided that where the time limit for furnishing of GSTR1 specified under section 38 and form GSTR2 specified under section 38 has been extended, the date of matching relating to the claim of ITC shall also be extended accordingly. So therefore, when the date of filing of GSTR2 has been extended, the date of matching related to claim of ITC shall also be extended accordingly. So say for July 2017, if date of filing of return under section 38 has till date not been notified, therefore as per the proviso to rule 69, the matching of ITC cannot also be held. And therefore the claim of ITC to be matched with the details filed by the outward supplier would be extended accordingly. So whenever a notice under section 42 read with section 73 is being issued, the first submission should be that 42 provides for matching of ITC basis upon the return to be filed under section 38. And since the due date of filing of return under section 38 has till date not been notified by virtue of the para number 2 of the notification issued for GSTR1. Therefore, as per the proviso to rule 69, the date of matching has also been extended, and since the date of matching under section 42 read with proviso to rule 69 has been extended, no matching exercise can be taken place. And once no matching exercise can be taken place, how does a question arises of non-compliance of section 42? So this is the first submission which should be invariably part when we are replying to a notice. Because when the due date has not been notified, the matching cannot take place. How can there be a question of a non-compliance of section 42 when the due date itself has not expired for that matching exercise? And thus, when we give this submission to the reply to the notice, the first part which the officer would have to reply is that whether at all provisions of section 42 are applicable or not. So this is the first submission which we have to make, and believe me, for the period up to 9th October 2019, there is no provision in the act which says that there should be a matching of ITC claimed in 3B vis-a-vis 2A, because section 42 itself is not applicable by virtue of proviso to rule 69. So once there is no section there, how can there be a non-compliance? What is the other section which they can take help of? Section 16 subsection 1. That section 16 subsection 1 says that the ITC should be credited to electronic credit ledger subject to the conditions and restrictions as may be prescribed. But even for the sake of admission, I say that Rule 36(4) is constitutionally valid. But that has also been inserted from 9th October 2019. But prior to 9th October 2019, there was no rule in the CGST rules which provided for matching of ITC claimed in 3B vis-a-vis reflected in 2A. The third section which they can claim is section 164. But that also says that the government is entitled to bring in the rule to carry out the provisions of the statute. And since there is no provision in the statute, as section 42 itself is not applicable by virtue of proviso to rule 69. So therefore, the benefit of section 164 also cannot be taken. So in my opinion, if you are receiving a notice for 17, 18, 18, 19 or ITC claimed up to 9th October 2019 or any notice which refers to section 42 or any notice which does not refer to any section but only refers to section 73, there is no applicable provision up to 9th October 2019 for matching of ITC claimed in 3B vis-a-vis reflected in 2A. So this is the first part. Now coming to the second time zone, that if you have received a notice under say that you have violated rule 36(4). Now what is rule 36(4) that we have discussed? But before going on to the rule 36(4) part, I would like to discuss one more situation. I don't know that whether it is happening in notices are being received on this aspect in Pune or not. But yes, notices on this aspect are being received in Rajasthan. See, when you download a GSTR 2B, there are two columns in GSTR 2B. One is ITC eligible to be availed and second is ITC ineligible. What is that column ITC ineligible? That is reflecting details of the supplier who have filed their GSTR1 after the expiry of due date of filing of return for the next financial year for the month of September. So for example, if I am speaking about 2020-21 and if my supplier has filed his GSTR1 after 20th October 2021, the GSTR2B would be reflecting it in ineligible column, saying that since your supplier has filed his GSTR21 after the due date of filing of return for the month of September of the next financial year, you are ineligible to claim that credit. From where it is coming? Why this report is coming in GSTR2B? Is there any provision in the statute which requires my supplier to file his GSTR1 within the time limit of filing of return for the month of September of next financial year? Yes. First, we have to see the enabling section if there is any, and then we have to see that whether at all this section is applicable or not. This report in GSTR 2B is coming by virtue of section 42 subsection 7. What section 42 subsection 7 said? It said that in case of the implementation of GSTR 1, 2 and 3, my supplier would have filed his GSTR 1. I would have accepted those entries in my GSTR. For the entries which were not there, I would have manually uploaded those entries and would have claimed provisional credit on the basis of those entries. Those entries would have been communicated to my supplier. If he would have accepted those entries within 1 month of filing of my manual within 1 month of uploading of those entries manually by me, that credit would have been become eligible. Otherwise, I would have to reverse that credit in the next month return. And if my supplier would have accepted those entries up to the due date of filing of return under section 39 of the next financial year for the month of September, I would have again become eligible to claim that credit. So my supplier would have filed one, I would have accepted those entries. For the missing entries, I would have uploaded manually those entries. If my supplier would have accepted till the next month, I would have validly received that credit. Otherwise, I would have to reverse that credit, and my supplier would be required to accept that credit by the next financial year for the till the month of September return. And if my supplier would have done by that time, I would have again become eligible to claim that credit. But if he would have if he would not have done so, that credit would have lapsed. But since GSTR 1, 2, and 3 could not come, so now the department in a fractured manner has sought to implement this section 42(7), thereby saying that since the matching could not be done, but at least we can say that if the supplier has filed his GSTR1 beyond the stipulated date for filing of return for the month of September of the next financial year, we would not be allowing you the credit. Now the question comes whether at all this is feasible. The application of section 42 subsection 7. Again, what we have discussed in the earlier part of our session, that since the matching exercise by virtue of proviso to rule 69 cannot take place, there is no question of not complying with the provisions of section 42 when the basic thing as provided under section 42 cannot take place. So if section 42(1) is not applicable, there cannot be a question of application or not compliance of section 42(7). First 42(1) has to be done with, and since by virtue of rule 69 42(1) cannot be done with, the matching cannot take place. How can there be a question of non-compliance of section 42(7)? So if you are receiving a notice wherein the revenue is saying that your supplier has filed his GSTR1 after the due date of filing of return under section 39 for the month of September of next financial year, just reply them that section 42 read with rule 69. The matching has not taken place because the due date of filing of GSTR2 has still not expired, and therefore the notice itself is invalid. So this is the second situation which you can come across. Now coming to the third part, rule 36 sub rule 4. That is the credit which is sought to be denied by the revenue by virtue of rule 36(4). So there are two basic things which we have to discuss before going on to the conclusion part, that how we have to reply to the notice which has been issued for violation of rule 36(4). See, there are the first thing, rule 36(4) is a delegated legislation. And what is a delegated legislation? The powers which have been delegated by the legislature to the executives. There are three basic pillars in constitution. One is the legislature, which legislates the law. Second is the judiciary, which judges the law. And third is the executive, who administers the law. So the legislature legislates the law. That is the CGST Act. And then they delegate the power to the executives. How they delegate the power to the executive? By providing in the statute by way of language that in the form, in the manner, in the time limit as may be prescribed. So whenever a statute uses the word term prescribed, that means the power to frame the form or the manner or the time has been delegated by the legislature to the executives. So therefore, whenever there is a delegated legislation, that is, whenever there is a rule, there has to be an enabling provision by the legislature. Without the power being delegated, an executive cannot acquire the power. So this is the first basic fundamental principle, that whenever we are reading the rule, try to find out the enabling provision in the statute, because the form, the time and the manner would only be given by the power to notify the form, the power to prescribe the rule, the power to prescribe the time limit would only be given by the enabling statute. Let's take an example of section 140, the transitional credit. The transitional credit under section 140, the original provision as was there under at the time 1st July 2017. Section 140 only delegated the power to notify the form and the manner of claiming of transitional credit. It did not delegated the power to notify the time limit under section 140 for filing of Tran 1. It was only rule 117 which provided that Tran 1 has to be filed within 180 days from the date of implementation of GST. So therefore a question arose that when the legislature has only delegated the power to prescribe the manner and the form to the executives for filing of Tran 1, how could have they exceeded the power by prescribing the time limit for filing of Tran 1? In one of the cases, on one of the high courts struck down the rule 117, providing that the executives are not entitled to specify the time limit under rule 117 because the legislature has only delegated the power to notify to prescribe the form and the manner. And thereafter the provision was retrospectively amended under section 140 to provide that the executives can prescribe the form and the manner and the time limit for claiming of transitional credit. So therefore, whenever we are reading through a rule, there has to be an enabling section. Second thing, that we have to be very particular about the words which have been used in the statute. And for this, let's go back to section 16(2)(c). Section 16(2)(c) says that subject to the provisions of section 41 and section 43A, the tax charge in respect of supply should have been deposited by the supplier either in cash or through utilization of ITC admissible in respect of such supply. Now the question comes, why at all section 16(2)(c) is subject to provisions of section 41 and section 43A? Because therein lies one of the important observations about rule 36(4) also. See, section 16(2)(c) says that if my supplier has deposited the tax, then only I would be eligible to claim the credit. So invariably my supplier has to deposit the tax first, then I should be able to claim the credit. But there are two provisions in the statute which allows the credit on the provisional basis without the supplier depositing the tax. One was section 41. Section 41 said that a recipient can claim credit on the basis of self-assessment. How a person could have self-assessed his tax? In the earlier scenario of GSTR 1, 2 and 3, because these provisions are there in the statute on the basis of 1, 2 and 3. A supplier would have filed his GSTR 1. I would have accepted those credits. And for the credits entries which were not reflecting in GSTR 2A, I would have manually uploaded those entries and claimed the credit on a provisional basis for 1 month. And if my supplier would not have accepted those credits, I would have had to reverse that credit after a period of 1 month. So by virtue of section 41, I was allowed to claim the credit on a provisional basis without my supplier depositing the tax. And that's why section 16(2)(c) is subject to section 41, because section 41 provides something which is going beyond the provisions of section 16(2)(c). And after CGST Amendment Act 2018, Section 43A was introduced, although it was not notified, the relevant date was not notified, but Section 43A also provided same thing which has been provided under Rule 36(4), that a recipient would be allowed credit on the basis of filing of GSTR1 by the supplier. And in addition to the credit which has been reflected in GSTR2A by virtue of filing of return statement by the supplier, a certain additional percentage would also be allowed. And since section 43A provided that the credit would be allowed on the basis of filing of statement of outward supplies by the supplier, and certain additional percentage also would be allowed. So therefore, it was something which was going beyond section 16(2)(c), that without the supplier depositing the tax for that additional percentage, credit would be allowed to the recipient. And therefore, section 16(2)(c) was subject to section 41 and section 43A. Now, what's special when section 16(2)(c) is subject to 41 and 43A, and how it is at all relevant for Rule 36(4)? See, when the legislature was well aware of the fact that section 16(2)(c) provides for claim of credit on the basis of supplier depositing the tax, and section 41 and 43A provides for claiming of credit on a provisional basis without the supplier depositing the tax, and they incorporated the provisions accordingly. Now Rule 36(4) is also providing the same thing, but it is not but the provisions of section 16(2)(c) are not subject to Rule 36(4). Similarly, they are as they are for section 41 and 43A. So in this case, Rule 36(4) is going beyond the provisions of the statute. Either the legislature should have done that subject to the provisions of section 41, section 43A and Rule 36(4), the tax charge in respect of supply should be deposited through cash or ITC. But since they have not done, Rule 36(4) is invalid. Now the question comes that whether at all a rule can supersede section 16(2)(c). It cannot do so. A delegated legislation cannot supersede the enabling legislation. So what Rule 36(4) is providing at present, it is going beyond section 16(2)(c), and when it is going beyond section 16(2)(c), a delegated legislation is going beyond the provision of the statute, which it cannot do. So supposedly your supplier has filed 3B, but he has filed an incorrect GSTR1, or he has reported those supplies in B2C column, or he has not filed GSTR1, and the revenue seeks to deny you the credit that your supplier has not filed GSTR1 and he has not complied with the provisions of Rule 36(4), even though the tax has been deposited. And the ITC is sought to be denied by virtue of non-compliance of Rule 36(4). Just say that a rule cannot override the provisions of the Act. Secondly, a provision of the statute cannot be made subject to the provision of the rule. And since the condition as provided under the statute has been fulfilled, even if the condition provided in the rule has not been complied, that cannot be a ground to deny me the credit. And from where it is coming? It is coming from Rule 300, from Article 300 capital A, which says that if I have satisfied all the conditions as laid down in the law, I am entitled to the credit, and I can only be deprived of my credit only by the authority of the law. Now, since I have complied with all the conditions under section 16(2), and the officer is trying to deny me credit by virtue of rule 36(4), rule is not a law, and rule cannot override the provision of the statute. And since rule cannot override the provision of statute, and since the condition as provided in statute has been complied, therefore I am well entitled to the credit. So this is the second part of rule 36(4). Now the question comes for rule 36(4), that what is the enabling provision for rule 36(4). Since rule 36(4) is a delegated legislation, what is the enabling provision for rule 36(4)? That if at all the officer is trying to invoke rule 36(4), it has to have a parent or an enabling legislation. What is the enabling legislation? Let's try to find out the enabling legislation for rule 36(4), because without the enabling legislation, a rule cannot be held to be a valid rule. There are 4 to 5 scenarios wherein the revenue can say that rule 36(4) has been issued under a certain statute. The first is section 16 subsection 1. See, section 16 subsection 1 provides that a registered person would be entitled to the credit subject to the restrictions and conditions as may be prescribed. So can rule 36(4) be issued under section 16 subsection 1? In my humble opinion, no, because the statute has been so drafted that section 16 subsection 2 overrides anything contained in 16 subsection 1 and 16 subsection 4. And when section 16 subsection 2 overrides anything contained in 16(1) and 16(4), therefore, if I have complied with all the provisions of section 16 subsection 2, a rule as inserted by way of section 16 subsection 1 cannot override section 16(2). And our submission further gains strength from the fact that from 1st of January 2022, section 16(2) has been inserted, which is, in my opinion, somewhere the enabling section for rule 36(4). Had the legislature found sufficient that section 16(1) is sufficient for rule 36(4), prior to 1st of January 2022, they would not have inserted 16(2) and 16(2) further strengthens our submission that 16(1) is not the enabling section for rule 36(4). And 16(2) has been rule from 1st of January 2022. Rule 36(4) has been inserted from 9th October 2019. Can a delegated legislation be inserted in the statute without the enabling legislation? No. So from 1st of January 2022, yes, I can say that rule 36(4) has an enabling section. But prior to 1st of January 2022, 16(1) cannot be sent to be the enabling legislation. 16(2) has only been inserted from 1st of January 2022. Whether there can be any other section which can be an enabling section for rule 36(4). The third section which we can refer to is section 16(2)(c). Can section 16(2)(c) be an enabling provision for rule 36(4)? In my opinion, no, because 16(2)(c) requires payment of tax, which is paid through 3B. Rule 36(4) says something about a provisional credit, which is available through GSTR1, and GSTR1 is not a proof of payment of tax. Therefore, 16(2)(c) cannot be an enabling provision for rule 36(4). Fourth, can section 43A be an enabling provision? Yes, it could have been, but since it has not been notified till date, and by Finance Act 2022, that section 43 itself has been deleted. So section 43A cannot also be an enabling provision for rule 36(4). Now the fifth and the last most important section, section 164. Can this be an enabling section for rule 36(4)? Again, in my opinion, no. Because section 164 enables the government to bring in the rules for carrying out the provisions of the act. So first there has to be a provision in the act, and for that only rule can be made. But as we have discussed up till now, for rule 36(4), there is no provision in the act. Neither section 16 subsection 1, neither 16(2)AA up to 1st of January 2022, neither 16(2)C, neither 43A. So when there is no provision in the act, there arises no question of section 164 coming to the rescue of rule 36(4). And therefore, whenever the legislature seeks to invoke rule 36(4), our submission should invariably contain that there is no enabling provision in the act for rule 36(4). And since there is no enabling provision in the act for rule 36(4), a delegated legislation cannot stand on itself. And if a delegated legislation without an enabling provision is seeking me to deny a credit, it is violative of Article 300(a), because a rule without an enabling section is not a valid law. It is a case wherein the executive have gone beyond the power which have been vested in them by the law. So in the second time frame, wherein the revenue is giving you a notice by invoking rule 36(4), the submission should invariably contain that rule 36(4) does not have an enabling legislation. And in case wherein your supplier has deposited the tax but has filed incorrect GSTR1, or has not filed GSTR1, or has filed your entries in B2C, and revenue is invoking rule 36(4), just write that my condition as laid down in 16(2)C has been complied with, and the rule cannot go beyond the provisions of the statute. Therefore, the credit is validly available to me. Had the intention of the legislature been to make section 16(2)C subject to rule 36(4), they would have done so. But in ideal scenario, in an ideal world, a rule cannot override the section, and the section cannot be subject to the provisions of the rule. So this should be the second part of our submission whenever a rule 36(4) is sought to be invoked by the legislature, by the revenue, by the officer. Now coming to the third part, what we have discussed, credit availed up to 9th October 2019, wherein there is no provision at all. Credit availed wherein rule 36(4) is in place and the officer is invoking rule 36(4). Now coming to the third part, wherein the credit is being denied because it is being claimed in excess of credit reflecting in GSTR 2B. But before going on to GSTR 2B, let's try to discuss that how a statute is enacted and how the rules are being brought. See, we are going to the very basic part of our constitution and the enactment of the statute, because CGST Act is suffering from the basic fundamental issues. Ideally, what happens? There is a constitutional provision, and on the basis of that constitutional provision, an act is implemented, and in that act, the power is delegated to the executives. By using the power, the executives provide the rules. On the basis of those rules, clarifications are issued through a circular, and on the basis of that circular, the press release are issued or certain other clarifications are issued. So the hierarchy goes constitution, statute, rules, circular, and then any press release. So the Constitution Act rules, circular, and press release. This is the what is happening in GST. We are moving in the reverse gear. First, there is a press release, then comes a circular, then comes a rule, then comes a statute, and then comes a statute. Although 246A Constitution is there, so I will not be going to that part. So we are moving into the reverse direction. Let's talk about GST 2B. First, there was a press release. Then there was a circular issued on 11th of October 2019, 11th of November 2019. Then there was a rule by virtue of 60 sub rule 7 from 1st of January 2021, which inserted GSTR 2B in the rules, but still rule 36.4 was not made subject to 2B. And then the enabling provision came on 1st of January 2022. So in simple words, I am first being asked to pass class 12th, then 11th, then 10th, and then I am asked to pass class 1st. So we are moving into the reverse direction. And GSTR 2B is nothing but a reverse direction car. That wherein the press release comes, then the circular comes, then the rule comes, and then the provision comes. So if I am being denied credit by virtue of GSTR 2B, the first submission which should be part of my reply, it should be that even if I accept that rule 36.4 is constitutionally valid, GSTR 2B is going beyond the circular, beyond rule 36.4 as well. Because rule 36.4 says that the credit should be reflected in my 2A. It does not say that the credit should be reflected by the due date of filing of GSTR 1 in my 2A. Had the intention of rule 36.4 been that the credit should be availed only after the due date of filing of GSTR 1, they would have amended rule 36.4 to provide that the credit should be availed to the extent GSTR 1 has been filed by the supplier up to the due date of filing of GSTR 1. But it is not so. It only said that the credit should be availed on the basis of GSTR 1 filed by the supplier. So even for the sake of admission, I admit that rule 36.4 is valid. Still, GSTR 2B is going beyond rule 36.4, and the government was well within their power to amend rule 36.4 whenever they brought GSTR 2B. But since they have not done, I cannot be denied credit merely by virtue of a circular which provides that the credit should be availed only up to the amount which is being reflected in 2A up to the due date of filing of GSTR 1. So the first part of our submission is that GSTR 2B is going beyond rule 36.4. And secondly, GSTR 2B has only been made part of the rules by virtue of 60 sub rule 7 from 1st of January 2021. And no provision in the rule and the statute is linking the claim of ITC with 2B. And if I am being denied the credit by virtue of GSTR 2B, which has come through circular and then subsequently in the rules, it is violation of Article 300 capital A, because I can be denied of my credit by virtue of a law provision, and it is not a legal provision. It is a provision which has come through circular, and something which is coming through a circular without the enabling provision in the law is not a valid law. So therefore, whenever we are receiving a notice for violation of credit claimed vis-a-vis 2B, make your submission for merit part the last part. First, challenge the advent or the incarnation of 2B. Secondly, it is going beyond rule 36.4. Third, there is no enabling provision for GSTR 2B. And fourth, Article 300 capital A say that I can be denied of my credit only by way of law, and 2B is not a law. So this is how we have to see the credit part wherein I'm claiming a credit and it is being matched through GSTR 2A and I'm receiving a notice for violation of claim of credit claimed in 3B vis-a-vis GSTR 2A. So summarizing the entire discussion we have had, the first thing which you should do while you have received a notice, first see that for which period it is there, whether it is up to 9th October 2019, after 9th October 2019 up to GSTR 2B, or for non-compliance with GSTR 2B. If it is up to 9th October 2019, challenge that there is no enabling provision in the statute and there is no corresponding rule. If it is issued for violation of Rule 36(4), challenge that Rule 36(4) does not have an enabling provision. Challenge that Rule Section 42 is not applicable because due date of filing of GSTR 2 has not been notified. Challenge that Rule 36(4) is going beyond 16(2)(c) if your supplier has filed 3B. Challenge that Rule 36(4) is violative of Article 300(A) because it is seeking to deny me the credit without the operation of the authority of the law. Thirdly, if the notice is being received for violation of credit vis-a-vis GSTR 2B, challenge that GSTR 2B has been brought by way of circular. Challenge that GSTR 2B is going beyond Rule 36(4), even if for the sake of admission I treat that Rule 36(4) is constitutionally valid. Challenge that Section 42 is not at all applicable. Challenge that 16(2)AA has only been inserted from 1st of January 2022. So if at all Rule 36(4) or GSTR 2B are valid, they can only be valid after 1st of January 2022. Challenge that GSTR 2B is violative of Article 300(A). Challenge that the provisions of the statute cannot be made subject to the circular or the rules. They always have an ascendance over the circular and the rules. So this is how something we have to reply to those notices. And believe me, whenever these submissions are part of a reply, the officer first of all would find it difficult to pass an order against it, or even if he goes to pass an order, this would be a very well laid foundation for taking the matter ahead before the appellate authority or the tribunal or the high courts. Once these grounds are being put in, then comes the question to reply on the merit, that in the alternative and without prejudice to anything which has been contained above, challenging the validity of the provisions of the notice, I hereby make a submission on merit that my purchases are genuine. I paid the consideration. My GST registration of my supplier was active on the date when I made purchase. I received the goods. I have the e-way bill. All the things which are based on merits. But above all this, first see that whether at all a section has been mentioned in addition to section 73-74. If no section has been mentioned, the first submission of the ground that the notice itself is invalid. So this is about 3B and a 2A mismatch. Now we come to section 16 subsection 4. Supposedly I have claimed credit beyond the time prescribed under section 16 subsection 4. It is a violation of section 16 subsection 4. The first thing, whether at all the legislature has the power to provide a time limit for claim of credit. See, whenever we are discussing a law, we have to discuss it both ways, that what are our rights and what is our obligation. So when I say ITC is my vested right, it is my obligation to fulfill the conditions laid down in the law. Secondly, whenever I say that legislature cannot put a time limit for claim of credit, first I have to see that whether at all I can say this or not. In the case of ALD Automotive Private Limited versus the commercial tax officer, a decision of dated 12th October 2018. Honorable Apex Court said that the legislature has the power to put in the time limit for claim of ITC. Because if ITC time limit is not there, it would become impossible for the legislature to monitor the input tax credit. So if I make a submission on 16 subsection 4 that legislature cannot put a time limit, I am totally incorrect by way of the decision of Honorable Apex Court, which is the law of the land as of now. So 16.4, when it provides a time limit, yes, the legislature is well within their power. But the question comes that how the act has been drafted. Because the manner in which the act has been drafted would only govern the ultimate conclusion. And that's why whenever I discuss these provisions, I always say that we have to read each and every word of the provision very carefully. See, what we have discussed till now, that ITC becomes my credit on the fulfillment of the conditions laid down in the statute. So once I fulfill those conditions, I become entitled to the credit. And once I become entitled to the credit, then I take the credit. So entitlement and taking are two different things. First, I have to be entitled to credit and then I have to take the credit. These are two verbs. I have to put in those two actions. First, the entitlement of the credit and then the taking of the credit. And when we go through the provisions of the statute, we also see that the legislature has used these two things, entitlement to the credit and entitled to take the credit, differently in the statute. When we speak about section 10 subsection 4 or section 16 subsection 2 or section 16(7) 1A, all these three provisions speaks about entitlement to the credit. And when we speak about section 16 subsection 1, section 16 subsection 4 or section 18(1) or 19(2), 19(5) or section 41, they all provide for entitlement to take the credit. So first comes the entitlement and then comes the taking part. And once I become entitled to the credit, the taking part can be deferred. How can it be deferred? See, section 16 subsection 1, the highlighted part in red, it speaks about entitled to take credit. Section 16 subsection 2 speaks about entitled to the credit. And section 16 subsection 4 speaks about entitled to take credit. So what section 16(1) and 16(4) says? They speaks about entitlement to take credit. And what 16(2) says? It speaks about entitled to the credit. So 16(2) is saying something which is prior to what is to be done under section 16(1) and 16(4). Because 16(2) says about entitlement to the credit and 16(1) and 16(4) says entitlement to take the credit. So once I become entitled, then I think about taking the credit. So 16(2) precedes first and then 16(1) and 16(4) comes. Why I am emphasizing on these two things again and again? That 16(2) comes first because it speaks about entitlement, and 16(1) and 16(4) comes thereafter because they speak about taking the credit. This is because 16(2) overrides 16(1) and 16(4). So when 16(2) says that notwithstanding anything contained in this section, it is overriding 16(1) and 16(4). And once 16(2) is overriding 16(1) and 16(4), if I become entitled to the credit, that becomes that says that ITC becomes my vested right. And once ITC becomes my vested right, I cannot be deprived by the authority of the law. And since 16.2 overrides 16.1, 16.4, therefore the time limit provided under 16.4 can only be a recommendatory time limit. It cannot supersede what has been provided under 16.2, because 16.2 provides about entitlement. Once I become entitled to ITC, it becomes my vested right. Once it becomes my vested right, I cannot be deprived of it. How could I have been deprived of my ITC by virtue of section 16 subsection 4, even if I would have complied with provisions of section 16.2? The legislature would have well done, wherein they would have drafted 16 subsection 2 in a manner that, notwithstanding anything contained in this section, but subject to the provisions of section 16 subsection 4, no registered person shall be entitled to the credit. So section 16.2 could have been made subject to section 16 subsection 4. And when section 16.2 would have been made subject to 16.4, that entitlement of credit would have been subject to a valid condition put in the law. But as section 16.4, as section 16.2 has not been made subject to 16.4, therefore 16.2 gains precedence over 16.1 and 16.4. And even if I have complied with the provisions of section 16.2 beyond the time limit provided under 16.4, still I would be entitled to the credit, because 16.2 starts with a non-obstinate clause that, notwithstanding anything contained in this section, therefore once I have satisfied all the conditions of 16.2, I cannot be denied of the credit, even though I have not fulfilled the conditions as provided under the 16.4. So whenever you are receiving a notice and for violation of condition of 16.4, just make it a point to put in that 16.2 is starting with a non-obstinate clause and it overrides 16.4, and the intention of the legislature while putting in the term entitled to credit and entitled to take the credit is very clear, that by way of entitlement ITC becomes my vested right, and taking is something which is beyond entitlement. And since section 16.2 is not subject to 16.4, which the legislature could have done, and since they have not done so, therefore even if I have complied with the provision of 16.2 beyond the time limit under 16.4, still I am entitled to the input tax credit. So this is one part of my submission. Now coming to the second part of my submission. See, there can be two scenarios wherein I've claimed the credit beyond the time limit under section 16.4. See, what we have discussed up till now for 16.4, we are challenging the validity of 16.4 and the manner in which the act has been drafted. So this is something which would take a longer time in deciding. But in the second scenario which we are discussing, there might be two situations. One, my output liability is say 1 lakh rupees, or my output liability is say 50 lakh rupees. I have a ITC of 20 lakh rupees. Now for filing of GST at 3B, I have to pay 30 lakh rupees first, and then only my 3B would be filed. So what I am required to do is, first I have to deposit the tax, and then only I would be entitled to claim the ITC. This is the first scenario. Now coming to the second scenario. I have an output liability of 50 lakh rupees, but my ITC is 70 lakh rupees. Now in this case, I am not required to deposit any tax. I can straight away file my 3B by showing the output liability of 50 lakh and claiming the ITC of 70 lakh rupees. How these two situations differ? These two situations differ because in the first scenario, I am required to pay 30 lakh rupees for availment of credit of 20 lakh rupees. And this And unless until I am in position to pay those 30 lakh rupees, I am not entitled to claim that 20 lakh also. So my claiming of ITC is subject to payment of tax of 30 lakh rupees. Now, if I do not have the amount, I am not able to claim the credit. Now, this issue went before the GST Council in 31st GST Council meeting. Although it was in respect of levy of interest, but in that GST Council meeting, it was categorically said in the agenda that the law allows filing of the return by part payment of taxes. That even if I am not able to deposit my tax in cash, I can still file my return by way of claiming part credit and keeping the tax due. That the law allows to do so, but the portal is not allowing the taxpayer to claim the ITC without the payment of tax. So in the example which we have discussed, law allows me to claim credit of 20 lakh rupees without payment of that 30 lakh rupees. But it is the portal which is not allowing me to do so, because I am required to deposit 30 lakh rupees in cash and then only my 3B would be filed. So if I can put forward a scenario that I was under financial crunch and I was not able to deposit the amount in cash, and the portal also did not allow me to claim the credit without the payment of tax. So the portal was going beyond the provisions of the law. So the restriction put in the portal was going beyond the provisions of the law. And since the restriction put in by the portal was going beyond the provisions of the law, the time limit provided in the section 16(4) cannot be complied by me due to the portal, not by the law. And this is something which is being asked by me to be done as impossible condition. Because my legal right, which is there in the law, is being denied by the portal. And the portal is superseding the law, which cannot be a case. I am asked to do the impossible, to claim the credit, by depositing cash, which is a condition which is going beyond the provisions of the law. And therefore, when I am going to challenge the time limit on this part, that the portal went beyond the provisions of the law, asked me to deposit the cash for availment of ITC, which is not as per the legal condition, my chances of succeeding enhances, because in this case I am not challenging the law, I am only challenging the portal. So whenever you are receiving a notice under section 16(4), try to see that whether the time limit was not followed with due to payment of tax. And if this is so, then you can very well challenge this time limit on the basis of the contention that the portal is going beyond the provisions of the law. And in case of second scenario, wherein the credit was the outward liability was 50 lakh rupees and credit was 70 lakh rupees, in that case we can only challenge the provisions of section 16 subsection 4 vis-a-vis section 16 subsection 2. So this is the second way of identifying the notice and in which category it is falling. Now comes the third part. See what I had said at the start, that there are many issues in the GST law, and unless until we are able to raise those issues in our submission and only we are submitting on the merit part, then in that case our reply would be incomplete. And for that we have to go through the provisions and the notifications and to be able to interpret in them in the manner as they should have been. See, whenever the matter reaches to the highest court, it might be possible that my argument would not sustain, but that does not mean that my arguments were not correct. A decision of a high court a single judge bench of High Court is overruled by a divisional bench. A decision of a DB of a High Court is overruled by a bench of Honorable Apex Court. A decision of a lesser bench of say 3-member bench of an Honorable Apex Court is overruled by a 9-member bench. But that does not mean that the law that the decision was incorrect. That only means that a further analysis of law has taken place, wherein the law has been analyzed by a higher court and it has been accordingly interpreted. So there is no harm in interpreting the law, putting forth your contention, and let it be decided by the appropriate authority. So now comes the third submission. In case of section 16 subsection 4, for the period up to 30th of September 2019. See what was originally envisaged. One would be filed by a supplier, I would be accepting the credit, and that credit would be flowing into my GSTR3. And for the credit which has not been filed by the supplier, I would be manually uploading it, and I would be provisionally claiming in my GSTR3 subject to the confirmation by the supplier. But that 123 was not implemented, and thereafter there was a circular on 2nd of September 2017 which said that even if there is an error in filing of GSTR3 that can be correct, even if there is an error in filing of GSTR3B that can be corrected at the time of filing of GSTR3, because we would be bringing in GSTR3 later on. So the circular was assuring me that even if you have made a mistake in 3B, that can be subsequently corrected in GSTR3. And when it was assuring me, therefore I was made to believe that GSTR3 would be notified later on. And then each and every notification which was issued for the GSTR1 due date up to 30th of September 2019, para 2, it provided a time limit for furnishing of the details of the return as the case may be under subsection 38(2) and subsection 39(1) shall be subsequently notified in the official gazette. So therefore, the notification also made me believe that yes, the return under section 39(1) for the period from July 17 to September 19 would be notified later on. So as a taxpayer, by virtue of the circular and the notifications, I was made to believe something. Then on 9th of October 2019, Rule 61(5) was retrospectively amended. And when Rule 61 sub Rule 5 was retrospectively amended, it was provided that GSTR 3B, if it has been filed, there would be no requirement to file GSTR 3. So, and this retrospective amendment has been upheld by Honorable Apex Court in case of Bharti Airtel and Arpit Company. I am not challenging Rule 61 sub Rule 5. What I am saying that up to the insertion of Rule 61 sub Rule 5, by virtue of the circular and by virtue of the notifications, I was made to believe that GSTR 3 due date would be notified later on. And once Rule 61 sub Rule 5 has been inserted, and if I see corresponding notification which is notifying the due date of filing of GSTR 1 for October 2019 to March 20, I see that now para 2 does not contain reference to 39 subsection 1. So there is a distinction between para 2 of GSTR 1 due date up to 30th of September 2019 and beyond 30th of September 2019, wherein up to September 2019 I was being made to believe, and the notifications till date stand in the same manner for the period up to September 2019. They have still not been amended by virtue of Rule 61 sub Rule 5. So up to September 2019, I was made to believe by way of a circular and by way of notification that GSTR 3 would be notified later on. And when GSTR 3 would be notified later on under section 39(1), I was under reasonable presumption that the time limit for 16.4 also would be consequentially extended, because 16.4 time limit is linked with 39 subsection 1. And there is a principle that wherein the executives are making something making a person to believe something, that yes, this thing would be happening in this manner, and the person is acting upon their assurance, then the right which has been vested by way of such assurance, it cannot be taken away. This is called the law of reasonable presumption, or wherein a person is being made to believe something by an act of the authority, then the authority is duty bound to perform that act. Article 14 of the Constitution of India, which speaks about equality, which keeps a restraint upon an arbitrary act. This principle is coming from Article 14, that if an officer, if an authority has said something that the thing would be happening in this manner, as in the present case, when the circular said that you are able to rectify mistakes in 3B while filing GSTR 3, the notification provided that we would be notifying at the date of filing of return under section 39(1) later on. And when a taxpayer has been made to believe something, and now since it has not been done, this is violative of Article 14. This is violative of the principle that the authority made to believe the authority made the taxpayer to believe. And when I am putting this submission, I am not challenging retrospective amendment of Rule 61(5). I am not going against the decision of Honorable Apex Court. What I am saying is that I was made to believe something, and since it has not been done till date, it should be done now. And if it is not being done now, it is violative of Article 14. It is violative of the assurance which was given to me by the authorities. But this is only up to 30th of September 2019, because subsequent to that, the notifications do not contain now any reference to section 39 subsection 1. So the section 16(4) notices can be divided into three parts. First, whether there is precondition to deposit tax in cash. If yes, then it can be challenged for the restriction put in the portal beyond the law. Second, if it is up to period up to 30th of September 2019, then we can challenge it on the basis of assurance given by way of the circular and the notification to notify the due date or notify the filing of GSTR 3. And third, we can challenge it that 16.2 overrides 16.4, and 16.2 is not subject to 16.4. So even if I have complied with the condition under section 16.2 beyond the time limit provided under 16.4, still I cannot be deprived of my vested right, because once I have complied with the provision of section 16.2, ITC becomes my vested right, and since 16.2 is not subject to 16.4, 16.4 has no application in my case. So this is about section 16 subsection 4. Now coming to section 16.2c. Now coming to section 16.2c. What happens if my supplier has not deposited the tax? See, what we have discussed up till now, that my supplier has not filed his GSTR 1 or has filed his incorrect GSTR 1. Now we are coming to the point wherein he has not filed his GSTR 3B. So in this case, what we have to argue? See, this 16.2c is coming from pre-VAT, pre-GST regime. In pre-GST regime, there was a condition that your seller has to deposit the tax, only then the purchaser can claim the credit. Now, GST Act has gone one step beyond. What they have said now, that you can claim ITC only when your supplier has deposited tax either in cash or by way of ITC which is admissible in respect of such supply. So, so I am not only required to see that whether my supplier has deposit tax, I am also required to see that whether he has deposited tax in cash or whether by way of ITC admissible in respect of such supply. Now the question comes that what is the power available with me in case my supplier does not do so? Whether I have the power to provisionally attach the bank account of the supplier, whether I have the power to provisionally attach the property of the supplier, whether I have the power to go and inspect his books of accounts, whether I have the power to go and seize his premises, whether I have the power to search his premises, whether I have the power to issue the notice to him that you have not deposited a tax, whether I have the power to make a best judgment of his liability, whether I have the power to prosecute and arrest him since he has not deposited tax, whether I have the power to go and prosecute and arrest him since although he had deposited tax but he did not deposit tax by proper ITC, admissible ITC, whether I have the power to levy penalty on him. None of the scenarios are available. None of the powers are available with me. Who has those powers? The proper officer has those powers. So am I not being asked to do the impossible? Yes, I am being asked to do the impossible. And when I am being asked to do the impossible, how can I be made to suffer non-compliance of something which was not within my powers? The lex not cogit impossibilia. And it is not as if this principle has not been used in any of the decisions. In the pre-GST regime decisions, in the case of RS transmission by Honorable Rajasthan High Court, which has again been followed by Honorable Rajasthan High Court in case of Asha Oil Traders, that the seller, the purchaser has done what was within his powers. He has provided all the details about the genuineness of the supplies. Now asking him to do the impossible when he has provided the proof of purchase, when he has provided the proof of transport of goods, when he has provided the proof of receipt of the goods, when he has put forward the contention that he has paid the consideration to the seller. Once he has done so, he cannot be denied the credit, and the provision in the RVAT Act, which was similar to section 16(2)(c), were read down by the Honorable Rajasthan High Court, wherein they said that a genuine purchaser cannot be denied his credit, and we are reading down the provision to the extent that unless until connivance is proved between the seller and the purchaser to pass on ineligible or illegal credit, a genuine purchaser cannot be denied his right to claim the credit. And this was the same thing which was held in case of Arise India by the Honorable Delhi High Court, the SLP for which was rejected by the Honorable Apex Court. So if we go through these two decisions, although we would not find the reference to lex not cogit impossibilia, but we would find reference to the impossibility on the part of purchaser to provide anything other than the evidence which he has put forward. And in case of Asha Oil Traders, which has been followed by Honorable Rajasthan High Court, they have even allowed the credit wherein the registration was cancelled from a retrospective date of the seller. That it is the power of the department to cancel the registration from a retrospective date, but it is not the liability of the purchaser to prove. It is only the liability of the purchaser to prove that when he purchased the goods, he was a genuine purchaser. In the GST regime, the LGW Industries case by Honorable Calcutta High Court, which has again been followed in another decision, which has come recently, about 5 to 7 days back, that a genuine purchaser cannot be denied his credit. The decision by Honorable Madras High Court in case of DY Beazle Industries, although it is only part of the judgment, it only covers part of the issue, that if any proceeding has to be taken against the purchaser, for non-payment of tax by the seller, the first part should be on the seller. The first proceeding should be taken against the seller. And once seller has not complied with those conditions, then only proceeding should be initiated against the buyer. But I would rely upon the judgment of DY Bethel Industries in my last submission. Prior to that, I would say that I am being asked to do the impossible. I would rely upon the decisions of Honorable Rajasthan High Court, Honorable Delhi High Court in case of RS Transmission Arise India. I would rely upon the decision Honorable Calcutta High Court in case of LGW Industries, and one recent decision, the name which I am not remembering. And then I will rely upon DY Bethel Industries, and then I would make a submission that my purchases are genuine. So whenever we are receiving a notice that your suppliers have not deposited tax, do refer to the principle of lex not corporate impossibilia. And similarly, whenever a notice is being received that your supplier has not filed GSTR1, and since the entry is not reflecting 2A, refer to the principle of lex not forget impossibilia, that I cannot be asked to do the impossible. This is a very important principle which we should refer in our submission invariably. So this is the part wherein I am receiving a notice for non-compliance of 16(2)(c). But concluding for this section, what I would like to suggest is that we need to educate our clients also that what are the documents which they need to keep. They need to keep the bill. They need to put in the evidence that the consideration has been paid. They need to put in the evidence that the goods have been received. They need to put in the evidence that the goods were transported. They need to have the e-way bill from the period from which it was applicable. And additionally, we can also ask them to put in the details of FASTag of the vehicle on the bilty, so that if the details of the FASTag are available on the bilty, that would prove that the vehicle traveled from the point of the sale to the point of the purchase, and then we received it. The movement of the vehicle would be proved by the insertion of the details of the FASTag. See, we have to channelize our submission according to the changing times. And FASTag is now a reality for each of the moving vehicle. So we need to put in that part also, which further strengthens our submission only. And last but not the least, whenever a notice is received for non-payment of tax by the supplier, raise a grievance on the Prime Minister grievance portal. That thing would travel down to the selling proper officer of the seller, and he would be required to take action against the seller, and he would be requiring it to report it to on the Prime Minister grievance portal that what action he has taken. And if no recovery can be made from the by the proper officer from the seller, then we can very well say that when the officer with all the powers cannot recover an amount, a person, a toothless person on which the entire responsibilities have been casted, how he can be made responsible for recovering tax from the seller? This is an evidence that a person with all the powers vested in the law, the proper officer of the seller, cannot recover anything. How can a genuine assessee be asked to compel a person to pay tax when he has no powers vested in the law? So this is how we can further strengthen our case. Rajesh, can I take 15 minutes more to conclude my presentation?
Yes, sir, please.
Yes. Okay, thank you. Now coming to the part for calculation of interest payable. See, there is a proposed amendment under section 50 subsection 3 that says that interest would only be leviable on the ITC availed and utilized. Before going on to this aspect of availment and utilization, we need to understand one thing, that a wrong availment of an ITC or a wrong utilization of an ITC can be an offense under section 73-74. But if I go through section 73-74, wrong availment or wrong utilization is an offense. But at the same time, both these sections provide that the interest would be calculated in the manner as provided in the section 50. See, why wrong availment and utilization is an offense? Because supposedly I avail an ITC which is an ineligible ITC in the year 2017. Now, if the department discovers that wrong availment after 5 years, I would go and challenge that a time limit for initiating the proceedings have elapsed, and now no proceedings for wrong availment can be initiated against me. So, an intelligent assessee, what he can do, he can avail the ITC in 2017 and defer its utilization up to 2022 for 5 years. And once the time limit as provided under 73 or 74 expires, then he will utilize it. So we cannot say that wrong availment is harmless. It can be harmful for the revenue if it is being utilized after 5 years. And therefore, wrong availment or wrong utilization itself are an offense under 73-74. But merely availment is not automatically liable for payment of interest, because interest is compensatory in nature and penalty is penal in nature. And when interest is compensatory in nature, it only says that I would be liable to interest when I have utilized it wrongly. So therefore, section 50 starts from the premise that I would be liable to interest only when I have utilized the ITC. Now the question comes that prior to amendment of 50 subsection 3, can I be made liable to pay interest on wrong availment without utilization? See, start with section 50 subsection 1. Section 50 subsection 1 says that interest would be liable to be paid on the tax which has been not paid or short paid. So what is meant by tax not paid or short paid? Supposedly I have no output liability. I am a dealer in exempted goods. Still I avail ITC of say 5 lakh rupees. Department comes to me and say that you have availed wrong ITC of 5 lakh rupees, so you are liable to penalty under section 74. Yes, they can make me liable because I have availed ITC beyond the provisions of the law. But can they make me liable to pay interest on the 5 lakh rupees? See, when my entire output is exempted and I have availed ITC of 5 lakh rupees, and that entire ITC is ineligible, I have not paid or short paid no taxes. There is no case of non-payment or short payment of tax because there is no liability. So in cases supposedly I have no output liability, I have availed ITC of 5 lakh rupees and department makes me to reverse that 5 lakh rupees, yes, I can be made liable to penalty under 73-74, but I cannot be made liable to interest because it is not a case of non-payment or short payment of tax. Take a second scenario. Your output liability is 1 lakh rupees, your ITC is 1,50,000 rupees. Out of that 1,50,000 rupees, 30,000 is ineligible credit. So your eligible credit is 1,20,000 rupees. Still, whether you can be made liable to pay interest? No, because this is not a case of non-payment or short payment of tax because your eligible ITC was more than the output. Take another example. Output liability is 1 lakh rupees. 1 lakh rupees. ITC is 1,50,000 rupees. Out of it, ineligible ITC is 80,000 rupees. So your eligible ITC is 70,000 rupees. The assessee can be made liable to pay interest for only 30,000 rupees because 30,000 rupees tax has been not paid or short paid. He cannot be made liable to pay interest on entire 80,000 rupees. Now coming to the fact that whether section 50 subsection 3 in its unamended form could have been made applicable, it could not have been done. Because section 50 subsection 3 spoke about violation of provision of section 42 subsection 10. And what was section 42 subsection 10? The first thing, the matching under section 42 has not taken place till date. So there arises no question of non-compliance of section 42.10. When the section itself is not applicable, how can there be a non-compliance? What was 42.10? Supplier had to file his GSTR1. I had to accept those credits. those credits which were missing were required to be uploaded manually. The supplier had to accept this. If the supplier would not accept it, I would have to reverse that credit. Once the credit has been reversed, then it can only be claimed when the supplier has accepted those entries. But if I reclaim that credit without supplier putting in the details, then there was a violation of 4210. The violation of 4210 was only applicable in case of reclaim of credit, which was reversed earlier. When the reversal cannot take place in absence of the mechanism under section 42 vis-a-vis proviso to rule 69, how can there be a case of reclaim of credit? So section 50 subsection 3 was not at all applicable, and that's why the legislature substituted it with a retrospective effect from 1st July 2017. Now coming to the proviso part, briefly coming on to the proviso part, which has been inserted under 50 subsection 1, and there is a wrong belief that now interest is only required to be paid on the cash component of the output liability. It is not so. What proviso to section 50 subsection 1 says that if you have declared the supply in the return for the same month in which it was made, then only interest on cash component would be applicable. But if you have declared supplies other than the month in which they were made, then the interest would be applicable on the gross basis. So supposedly a seller has made supplies in July 17 of say 1 lakh rupees, and he has an input tax credit of 1,20,000 rupees. He files his return for July 17 by 20th of August 2017, wherein he only declares ITC of 80 lakh rupees, outward liability of 80,000 rupees instead of 1 lakh rupees, and he claims entire ITC of 1,20,000 rupees. So now he has an excess ITC of 40,000 rupees. Now the difference 20,000 rupees, which was short reported in July 17, is made good in March 2018, and it is adjusted from the ITC of 40,000 rupees. In this case, that 20,000 rupees has not been declared in the return for the month in which they were made. Therefore, in this case, the interest on 20,000 rupees would be on gross basis, it would not be on net basis. This proviso only benefits in case, going back to the example that my outward liability of 1 lakh rupees, my ITC was 1,20,000 rupees for July 17, and I filed the return for July 17 in July 2018. After a gap of 1 year, but I declare all the outward supplies in the return of July 17 only, although it is filed after 1 year, and I claim the entire ITC, then no interest would be liable to be paid. So in cases wherein there is a difference between a GSTR 1 and 3B, wherein outward supplies have been reflected in GSTR 1 earlier and liability has been paid subsequently, then in such case there might be a case wherein the interest would be payable on a gross basis. So we need to be very careful while reporting liabilities in 1 and 3B, because any delay in reporting liability in 3B or any lapse on the part in filing 3B, and if the liability is reported in subsequent 3B, then the interest would be payable on a gross basis, not on the net basis. Coming to the last two parts of my presentation. First is the applicability of 180 days provision. See, the applicability of the provision of non-payment of consideration within a period of 1 day from the date of issue of invoice. Now, what happens in some cases that there is an agreement between a person wherein he issues an invoice, and once the invoice is issued, there is an agreement that the payment of this bill has to be made, say, after 1 year, or certain amount out of this bill will be held back and it would be paid on the satisfactory completion of the contract. Now, in this case, there is an agreement that the amount would be paid after a time lapse or at a date which is beyond the period of 180 days. Now, can the officer ask you to pay interest in reverse ITC because the consideration has been paid after 180 days? Supposedly, Mr. X issues an invoice of 1 lakh rupees on which tax is 18,000 rupees, they agree that 20,000 rupees would be paid after 1 year on the satisfactory completion of the contract. Now, whether the revenue officer can ask you to reverse ITC on that 20,000 rupees. In my opinion, if we go through section 63 of the Indian Contract Act, it says that when the promisee has dispensed the promisor from his obligation, then the promisor is no longer liable to perform his obligation, and it would be treated that his obligation stands satisfied, because the promisee has used his right to waive. And once he has used his right to waive, promisor is discharged of his responsibility. And since in this case the recipient, since in this case the seller has agreed that the purchaser can pay him the amount of 20,000 rupees after 1 year, the purchaser is no longer liable to pay that amount to the seller prior to that 1 year. And since he is no longer required and the seller has exercised his right to waiver, therefore there is no non-compliance of section 16 subsection 2, because in addition to this right to waive, I cannot be asked to do the impossible. If my seller has deferred his payment beyond a period of 180 days, I cannot go and put the amount into his bank account. So whenever a notice is being received for non-compliance of 180 days, and you are having a case wherein both seller and the buyer agreed for a deferred payment, we can take help of section 63 of the Indian Contract Act. And also, let's not forget impossibility, that I cannot be asked to do the impossible. Now, coming to the last part, the amendment made by way of substitution of section 38 of substitution of section 38 by Finance Act 2022. Although this act, Finance Act 2022, has been notified, but the effective date for section 38 has till date not been notified. What section 38 says? That a credit would be denied to the recipient if there is a difference between a 3B and one of the supplier, if there is a difference between 3B and 2A of the supplier, if the supplier is a new is having a new registration, if the supplier has not paid his output liability up to a certain percentage in cash component. What is this? This is nothing but one of the most draconian provisions which I can see in the legislative history. And in many seminars, I am asked that how section 38 would be complied with. What I can only say that what we have discussed at length, that I cannot be asked to do the impossible. If I am a genuine purchaser, come what may condition be inserted in the act, by way of section 16(2)AA, by way of section 16(2)B, by way of section 16(2)C, by way of 16(2)AA, by way of section 16(2)BA, or by way of section 16(2)C. If I am a genuine supplier, genuine purchaser, I have all the documents, then the law ultimately would have to be read down in my favor. And that is what has happened in the pre-GST regime. It is not that we do not have a precedence for that. And that is what has been given in the case of LGW Industries by Honorable Calcutta High Court. So whatever may be brought under section 38, if I am a genuine purchaser, try to keep on record all the evidences which are there, which are well within the purview, that you should have the invoice, the goods should have been received, that is section 16(2)A and section 16(2)B. The proof of transportation should be there, the proof of receipt should be there, the e-way bill should be there. I should have proof of payment of the consideration to the seller. In the chain scenario, I could have the proof of the FASTag. If I have all these things, in my opinion, section 38 is ultra vires. And the condition inserted by your section 16(2)AA or section 16(2)BA of Finance Act 2022 will not stand. The only thing is we have to educate the assessee. But at the same time, what I would say, that educate the assessee to have all the evidences and try to educate them to comply with the provisions of the law to the best extent possible. I'm not saying that we should make unreasonable things happen. We should force the seller to comply with, but at least where there should be a effort from the end of the recipient to comply with the provision to the extent it is possible. Once this has been done, no one, in my opinion, humble opinion, can deny the credit to a genuine purchaser. So with this, I would like to conclude the session, and the provisions, all my presentation would be shared with the organizers, which can be later on shared with the participants of this seminar. And thank you very much for a patient hearing, and I hand over the session back to the organizers. Thank you, sir.
Thank you so much, sir. We have a few questions coming up.
Yes.
Manish Kumar has a question saying, sir, whether the proceedings under section 61 is required before issuance of show cause notice under section 73 or 74.
Manishi, देखिए, if we go through section 74, 73, 74, the officer can initiate proceedings under 73, 74 on the basis of any information which has been received. So he might initiate a proceeding under 73, 74 through section 61. He might initiate a proceeding under section 73, 74 through section 65. He might initiate proceeding under section 70, 74 through section 66. He might initiate proceeding under section 70, 74 by section 67. He might initiate proceeding by way of issuance of summon and then go to 73, 74. Or he can directly go to 73, 74. See, section 61, 65, 66, 70, 67 and 70. They are only, what I can say, that all roads lead to Rome. So these are only a procedural section wherein either the officer can go through these provisions under section 73 to 74, or he can go directly to through 73, 74. So if he have gone issued notice under 73, 74 directly, he can very well do so. He is not required to go under section 61.
Next question. In the example of penalty notice under section 122, specific offense not mentioned, if he pointed out to the issuing officer, can he reissue the corrected notice with the specific changes? And if yes, will it be a valid notice?
He cannot do so, because once an issue has been notice has been issued on a subject, it cannot be modified or changed. It can be rectified for a prima facie error, that yes, the amount was incorrectly mentioned, but it cannot be amended or revised to a complete extent. Then the notice itself has to be followed while passing the order. So whenever you are making a submission, first make a submission that the notice itself is valid, and then at all, if required, you can also make the submission on the merit aspect, but with a rider that in the alternative and without prejudice to anything contained above, and reserving the right to challenge the notice on the question that the applicable section was not mentioned. We hereby reply the notice on merit.
GSTR 3B of a particular financial year is filed after 20th of October of such financial year. Department says ITC can be availed through GSTR 3B only. What can be done in such cases?
I am discussing in detail while discussing section 16.4. Try to identify in which of these three conditions your case is falling, and you can accordingly take action.
How can we say that? How can we say there is no rule of 2A matching up to 9/10/2019, as section 16.2 clearly mentions that tax should have been paid by the supplier?
See, what I have said, section 16.2c says tax should have been paid. How tax is paid? Tax is paid through 3B. What I am receiving a notice? I am receiving a notice of mismatch in 3B and 2A. How 2A is generated? It is generated through GSTR1. What is GSTR1? Whether it is a proof of payment of tax, it is not a proof of payment of tax. If at all 2A and 3B would have come through 16.2c, there would have been no requirement for insertion of 16.2AA. Try to understand how the law is being amended, and then try to see. Once I attended a seminar for future trainer program conducted by ICI in the year 2016. And in that trainer program, I was an attendant, I was not a speaker. And one of the speakers came and shared a very good thing, that we as a professional, as on 1st of July 2017, has the privilege to see that how the law has evolved. And the evolvement of the law is a very important thing, that how the notices or proceedings are conducted. So whenever I am replying to a proceeding, I can see that how the law has evolved, and accordingly, whenever an amendment is made, it is only made to cure a defect which was there in the law previously. And if I am able to make it part of my submission, then the officer has to reply that my submission is incorrect. And in GST, I have a draft law. Then there was a model law issued in November 16. Then there was an act passed by the Parliament in April 2017. And for every GST Council meeting, there is an agenda and there is a minutes. So there is an ample material available for the development of the law. And if we are ignoring the development of the law of 16(2)AA, then in my opinion, we are missing out on a substantial argument which we can make against Rule 36(4). And at the same time, whenever a notice is received for 3B2A, quoting section 16(2)C, in many cases, I received the notice in such manner also. The first thing you should say that 3B2A mismatch is different than section 16(2)C. And for 3B2A mismatch, there is no enabling section. And even for the sake of admission, I treat that section 16(2)C is applicable. Although it does not refers to matching of 3B2A, it only refers to payment of tax. Still, 16(2)C is violative of principle of lex not coget impossibilia. See, our reply should be comprehensive enough, covering each and every aspect. And as I stated in the starting of the session, read through the judgment of Mohit Mineral. The amazing arguments, the amazing convincing method which was used by the Additional Solicitor General, wherein alternative arguments were made. That my first argument is this. In the alternative, I am raising this argument. In the alternative, I am raising this argument. And the amazing manner in which the arguments were made. See, the judgment might have gone in the favor of taxpayer, but as a professional, I learned through that judgment that how I have to argue in case there are multiple arguments. So in case you are receiving notice under section 16(2)C for 3B2A, make it a part that 16(2)C is not applicable on payment. At the same time, 16(2)C is violative Article 300 capital A and Article 19(1)G, and it enforces me to comply with something which is not within my possibility.
What if customer has held an amount of GST not reflected on the portal? Should he defend the case or pay because he has held the GST and will attract provision of ITC reversal due to non-payment within 180 days?
See, in my opinion, if you have withheld the amount for non-payment of the tax by the supplier, see, you have paid the entire consideration. What you have not paid is the tax amount. So at best, on the safer side, what you can do is reverse the tax portion on that amount. See, there is an amount of say 118 rupees, out of which 100 rupees have been paid by you. Now you have withheld 18 rupees. You make a reversal of 18% on that 18 rupees, that is 1.64 something rupees, and then argue that then you are not required to pay that entire, because you have substantially complied with the payment of consideration to the supplier, but at the same time you have repaid the amount of non-payment of consideration within 180 days.
If validity of notice is not challenged in the first proceedings, can it be challenged for the first time in appeal proceedings?
See, that's why I have said that our reply should be comprehensive, because in my opinion, if we are raising a new ground before an appellate authority, he is well within right to say that this new contention cannot be raised because it has not been raised before the officer. So our reply should be comprehensive enough, and it is imperative that our reply should be well written and covering all the aspects before the officer. Yes, it might be raised before the appellate authority, but then we are but when we are running a risk that he might deny it, that since you are raising a new ground before the appellate authority which was not raised before the assessing officer.
Notice received GST DRC 01A Rule 142(2)A. Excess ITC is claimed as supplier has filed GSTR 1 after the due date with interest. Input credit appears if downloaded monthly GSTR 2A, but officer says that you have to pay tax and interest notice related to financial year 2018-19 and is received on 3rd of Jan 2022.
See, this part I have already discussed, that this ineligible credit which is being shown is by virtue of section 42 subsection 7. And we have discussed at length that why section 42 is not applicable in present scenario. So if you are receiving a notice, if the query is here, whether any section was quoted when this notice was received. Okay. Supposedly, if they have mentioned section, then we can say that section 42 is not applicable, as we have discussed vis-a-vis rule 69. Even if it is not mentioned the section, first submission, the section has not been mentioned, so therefore the notice itself is void. Secondly, in the alternative, 42.7 is not applicable, therefore 42.7 is not applicable, therefore there is no case wherein ITC, if the GST1 has been filed by the supplier, can be held to be invalid merely because he has filed after due date. Thirdly, and most importantly, strategically, supposedly you have received a notice under section 61 for scrutiny of returns. See, scrutiny of returns is not an assessment provision because demand would ultimately have to be quantified under section 73-74. It is different from section 143 proceedings and income tax, wherein the order itself is passed under section 143. Under section 61, only scrutiny takes place. The order would be passed ultimately under section 73-74. Secondly, even if a DRC 1A is received, and you are sure that the officer is going to create a demand for non-reflection of ITC in 2A, in my opinion, no reply should be made on the validity part of the provisions, because then you are educating the officer to make the notice as comprehensive as possible on the entire submissions which we have made under DRC 1A or under section 61. Your detailed submissions, your comprehensive submission should only be after issuance of notice under section 73, under section 61, or against DRC 1A. If you at all intend to reply, just provide the evidences rather than making the reply on merit. You have to take a call on a case-to-case basis. If you are satisfied that on the basis of reply on merits, your officer would be satisfied and drop the proceeding, make the reply on the merit. But if you know that he is not going to drop the proceeding on reply on merit under section 61 or under section 65 or issuance of DRC 1A, do not make reply on merit in either of these three occasions. Make a reply on merit only after issuance of the notice, because once notice has been issued and it is a defective notice, he cannot correct it, and that proceeding would itself be liable to be quashed. So we have to strategize our reply, that when we have to make the reply to a proceeding.
ITC is mistakenly reversed. Can the ITC be reclaimed now?
See, this is something which would be decided by the courts later on, because section 39(9), it says that if any error has been there while filing of return, it can only be corrected up to a time as provided under the law. So if I have reversed the ITC, which is going beyond the provisions of the law, this is an error committed by me while filing of the return. So by way of section 39(9), it can only be corrected up to the due date of filing of return of the September of next financial year. And if I'm not correcting that mistake, then in my opinion, it would be hit by section 39(9). So it is better that we make the corrections by way of section 39(9) time limit, and section 39(9) time limit is not at all illegal. It is not at all ultra vires. There is a time limit under income tax also to revise the return. It is not as if that if I have made an error in filing of income tax return, I can correct it for an indefinite period. So therefore, the sanctity as provided in the 39(9) for making rectifications in the returns filed, not vis-a-vis the ITC claimed, for making rectification in the return should be, in my opinion, should be complied with.
When payment is made after 180 days, that is, say, paid in 9 months, can we just pay 9 months interest only instead of reversal and reclaim of ITC?
See, the question now arises that when you are making the payment of the interest. Supposedly you have purchased goods on January 2022. Now you made a payment in October 2022, and no departmental proceeding take place in between that period. So what you can do in October 2022, you can claim and reverse in the same return and pay the differential interest. But this act comes with a rider, because supposedly the goods were purchased in January 2022 and ITC and was paid in the October 2022, and a search takes place in July 2022. Now in that case, if the department identifies that you have not reversed the credit in the month of July 2022, you would not be knowing that you would be making payment in October. In that case, that entire ITC would be liable to be reversed along with penalty also. So unless until there is a counter action between the department between the intermittent period, you can just claim and reverse in the same return with differential payment of interest. But if there is a action in between, then you are running a risk of liable to penalty.
Section 16.4 is for entitlement of credit from point of view of ITC claimant. However, officer denying credit invoking section 16.4 that GSTR1 filed beyond the statutory limit by the vendor.
Yeah, I have discussed. If section 16.4 is being used, then you can straight away say that the entire proceedings are invalid. And in addition to that, 16 subsection 4, you can also there say that reserving the right to challenge the notice in 16.4 has been used. Section 42 is also not applicable. 16.4 is not applicable because it only speaks about the recipient. It does not speak about the supplier. That's what I'm saying from the starting, that the officers are not knowing which section they have to invoke. And if you are not highlighting their error in invoking wrong section, then somewhere down the line we are not making our reply comprehensive.
Reply to notice is not given and order is passed. Can we file the appeal now?
See, you can file an appeal, but again the opportunity of hearing was given to you, and if you are not able to avail that opportunity, then the court might say that you have not availed the opportunity. So therefore, the department ultimately would have to decide the case. And if the best judgment has been made, the department has not made any error. So if we are not replying to the notice, we are running a risk wherein the matter might be decided ex parte, and we at the appellate authority level also, we might not be able to put our case on merit, because the appellate authority first would decide that whether sufficient opportunity was given to you or not. And if it is decided sufficient opportunity is given to you and you are not availed, then they would not be going on to the merit, and the case would be decided held to be valid, decided on ex parte basis.
Whether we can make submissions for notice received in form ASMT 10 in respect of mismatch of 3B and 2A.
See, again, you can make a submission, but under section 61, if a notice is being issued, first, what is the corresponding section which I have not complied with? There is no section. See, go and see ASMT 10. There is no section there in ASMT 10 which are being quoted by the officer. But hold on to this part and make a submission that your proceeding does not provide any section when you have received a notice under section 73. Do not make it a part of a submission while replying to the notice under section 61. And in my opinion, if the officer is not ready to accept your contention for 3B2A mismatch, then we should not raise the submission of absence of the provision until replying to the notice under section 73.
Can it be argued that ITC can be on the basis of entry in books of accounts also, not necessarily through GST or 3B?
See, again, it is a far-fetched call, because nowhere in the entire statute it has been said that the availment of ITC as per the books of accounts would be sufficient. But yes, it can be made a part of our submission, because when we are making submission, there is no restriction in the number of submissions made. We can always equate that entitled to take credit, since the term take has not been linked with GST or 3B. It is only speaking about the claim in the books of accounts, because nowhere in the statute restricts that take does not mean availment of credit in the books of account. But again, it would be the last submission which I would make, because prior to that there are much more important submissions or much more relevant submissions which I can take. But yes, you can make that submission while replying to 16.4.
So I hope everyone's questions are answered. I request CA Rajesh Agarwal sir to kindly proceed with the vote of thanks.
Thank you, Aishwarya. On behalf of Pune branch of WRC of ICI and all my participants, I warmly extend my vote of thanks to C. Arpit Haldia sir for coming, accepting our invitation and enlighten us on the intricacies in input tax credit and ASMT 10 related issues. Really, sir, you have covered comprehensively for more than 2.5 hours, and I am now clear that there are litigations with respect to the input tax credit. Department intention is always to levy or use the negative part of the provisions. Or sometimes they don't use the provisions and levy or issue notices. But how we should interact, tactfully reply to the notices, or without going into the details, or when to give with provisions. Sir, one part only I need to ask you, request you to share whether we can make a standard replies to such notices, as like Hiregange sir shared reply for section 16.4. Might be many of my members have gone through 16.4. Like this, can we standardize the replies instead of?
Yes. See, the replies can be standardized in all the three situations. ITC availed prior to 9 October 2010, ITC availed in violation of Rule 36.4, and ITC availed in contravention of 2B. A standardized replies can always be formed and can be shared to the members.
Everything is now very department has made it standardized for issuing ASMT. So we can standardize the replies.
Yes, we can standardize the reply, and I would share a draft with you also, which you can share across the branch, wherein the reply can be used and be modified according to the situation and the notice which has been issued.
It will be great, sir, if you share. You could share now. It will be great. Thank you, sir, for open-heartedly.
What I would like to add one more thing is there, that whenever we receive a notice, not only with respect to ITC, generally whenever we receive a notice for GST, since the law is in its evolving stage, try to read the provisions 10 times, because believe me, in many of the cases wherein I have started with the inhibition that the case is going against the SSE, when I have read through the provisions 10 times, I have come with a new explanation. Like a point which I shared for 180 days reversal. I was just having a notice wherein a retention money was ITC on retention money was sought to be revived. And prior to that, I have not gone into the detail of this provision. But when I gone through in detail of this provision and try to link it with the other act, what we rarely do is we do not try to link the provisions CGST Act with the Constitution, the allied acts. And once we are able to do so, our submission would be that much more comprehensive. And whenever you receive a notice, see it as an opportunity that you are getting an opportunity to go through the act and at the same time be paid by the assessee, because you are reading something on for which you are being paid by the assessee for drafting a reply. So see it as an opportunity. Don't see that department has done something wrong and why do that? Let them do, because ultimately we are here to litigate on the interpretation aspect. And if we are able to analyze, decode the act, it would be a huge benefit for us going into the long run. So try to read the act. Some people ask me that what is the best book which comprehensively covers the subject. I say that when you are developing your understanding on the basis of a book, you are restricting yourself to the analysis which has been given by the author. But when you are going through the act, you are developing your own understanding. So don't restrict your understanding as per the understanding of the author. Try to interpret and learn from the statute, because this is the best book which can be available with you. Initially, you can refer a book, but ultimately you have to come onto the act and try to understand the nitty-gritty, the meaning of a term, the comma, the full stop, the semicolon. then only you would enjoy learning and reading the act, because it is something like music, that as far as down I get myself involved into music, I start to enjoy the music. So same goes with the statute as well.
Excellent, sir. Sir, just one point. In now day-to-day routine, many of our colleagues, members, professional brothers are busy in compliances in such a way they are not getting time to matlab, you can say fruitful time to study in depth the book or the bare act. Nowadays, what we professionals do, as per the requirement we read. Suppose there is a case of liquidated damages. You read what is liquidated damages, whether it is auctionable claim, what is the consideration, whether it is covered under the definition of consideration. If there is a case of job work, then we read what is ITC 04, whether it is required. If now we have not complied ITC 04, what will be the consequences? If there is no issue involved, there is less reading. I say, I can't say no reading, but there is a less reading, sir. So we have to develop our reading habit, inculcate, as rightly said by sir, we should inculcate the habit of reading, focus on their act or the interpretation of the act.
See, what I would like to add here is that rarely a professional, be it an advocate or a chartered accountant, gets time to read in the working hours. That is, say 9 to 7, 9 to 8. How the reading habit has to develop, that what you do, the time you get, sometimes coming from the office, after coming from the office, or early in the morning. That is the time when you can dedicate it to writing. See, I have written books from my personal experience. I have not written the books between 9 to 7 in the morning. It has been written only after that, because if I had written books during that period, my partner would have thrown me out of the office. That you write the books, I will run the office. So ultimately, see, the question is, what comes first? The hen comes first, or the egg comes first? So अगर मैं इंतजार कर रहा हूँ कि if the case comes, then only I would be reading. Then somewhere down the line, I would be missing on the opportunities which I am getting. See, whatever I have spoken today, it is not as if I have faced all the situations in my professional life. It is something which has been developed while reading, and the questions which have been asked by the participants. It not only enhances their knowledge, but it also enhances my knowledge, because these are some situations which I might not have faced till now, but which I will face somewhere down the line. So we have to see that how we have to prepare when we are on the pitch and getting a bouncer. Where we have to prepare ourselves at that time, facing the bouncer first time, or we have to prepare ourselves for the bouncer, that whenever we will be on the field, we are ready to face the bouncer. In my opinion, the second part is there, and even if the time is being dedicated for studies, some time out of the office time, beyond the office time, believe me, it will only help you. It would stand you in a separate footing from the rest of the professionals.
Excellent. Thank you, sir, for value addition sharing, which will definitely help members in their regular practice. Over to you, Aishwarya. Unmute yourself, Aishwarya. Unmute.
Sir, I request you to present the vote of thanks to everyone.
On behalf of Pune ICI, I thank Arpit sir, all participants for patient hearing, and definitely Aishwarya for nicely conducting this session as a MOC. Thanks to Pune branch staff for all coordination. Thank you, sir. We virtually felicitate you because this is a virtual seminar. Thank you, sir. Thanks a lot for.
Thank you, Rajesh ji,
yes.
for giving me this opportunity, for sharing my thoughts.
Thank you, sir. All has appreciated your session and the way you have conducted this.
My pleasure. See, my effort is only that if I can justify the occasion of you calling me on the dais, the virtual dais, and if the purpose is served, then it's my pleasure. And
definitely, sir, I like you should be there at Pune branch physically.
My pleasure. I'm always
Yes,
ready.
yes. Thank you, sir.
Thank you. I would be sharing the presentation through WhatsApp to you. And in the coming days, I would share the draft reply, also standard reply, which you can share across the Pune branch.
Yes, sir. Thank you, sir. Thanks a lot.
Thank you.